Today, we're going to talk about how renovation and construction loans work because they're very interesting and different loans that most banks and credit unions don't do. What are they? First of all, they are a type of mortgage. If you're building an ADU, it's part of the real estate. The term ADU means accessory dwelling unit, meaning accessory to the mother house. A mortgage is a loan secured by real estate. So if the ADU is part of the property, obviously it is, then it's going to be financed via a mortgage, not a personal loan or unsecured loan or anything else. And the good news is that makes it the lowest interest rate on the planet and it's tax deductible. So usually renovation loans are first or second position. Most of what we do is first position renovation loans, and these are provided by the big government agencies, Fannie Mae, Freddie Mac, FHA, and VA. We do have non-government loans as well, but the government agencies generally set the guidelines for how these things work. And it is a much more complicated loan, as I mentioned. What's different about renovation and construction loans is they're based on the future value after construction is completed. And it takes into account the future rental income that you're going to receive. And we can use a portion of that rental income to help you qualify. So what do I mean by that? Quite literally, I send the appraiser out with the pretty architectural designs and the pictures and the floor plan, and he says, "Oh, I see what you're going to build. When you're done, the property will be worth much more than it currently is." In this example, let's imagine that this house is currently worth $700,000. And if you did a cash out refinance, or even for most credit unions, a HELOC will only go up to 80% loan to value. So if we take 700,000 and subtract 560,000 on, or 450,000 on the current mortgage, that doesn't really get us the cash we need to build what we want. But let's imagine that appraiser gave us an $800,000 future value. Because we can lend up to 95% of future value, sometimes up to 97% future value, sometimes 110% of future value, depending on which loan product we're using. That, when you subtract the first mortgage, that gives us the cash available to build what we need to do. So that's the difference between renovation and construction loans and traditional mortgages. So when you estimate what does an ADU cost, generally speaking, the attached units tend to be about $100,000, and every $100,000 is about 600 bucks a month on your mortgage. That doesn't factor in the incredible tax deduction. When you borrow on a first mortgage, generally speaking, your interest rate, your net interest rate is closer to between 3 and 5%, depending on your tax deductions. So if every $100,000 costs $600 per month, then every $200,000 will cost $1,200 per month. And that's typically the cost I see for the detached one-bedroom ADUs. Conversely, move the decimal point. Every $10,000 you spend in rehab or extra stuff is going to be about $60 per month. That's how cheap mortgage loans are. During renovation lending, while you're at it, if you're building the ADU, you can also do repairs on the primary home. And that's good news because if you've got contractors stomping through your yard, it's a lot cheaper to do all of the work at once rather than have them come back another time, make another service charge, etc. So you want to think strategically about what you want to do during this whole renovation process, not only for the construction budget to be lower, but also to make sure you include everything you want in the construction budget for the loan. What's different about renovation lending as well is that we have construction oversight. Banks and the government agencies like Fannie Mae have the same problem you do. We need to make sure that the contractors are building properly. They're building it to permit standards, and you're getting your money's worth from your construction bid. If a contractor said we're going to build XYZ, then we need to make sure that you are in fact getting XYZ. The way that Fannie Mae require and others require us to do that construction oversight is through an independent HUD inspector. This is a specialized home inspector who's certified by the Federal Department of Housing and Urban Development. And it's actually his job to oversee construction, and he authorizes payment from the bank to pay contractors as work proceeds. So your HUD inspector is your buddy and mine. He can see things that I wouldn't necessarily have caught because I'm not a construction expert, and he can make sure you're getting your money's worth and that your contractor is getting paid on time as they need to and deserve. Renovation loans are also very different from your standard purchase loans and refinances because they take so much collaboration. There's a lot of back and forth between you, the builder, me. Can we fit it all in? Oh, we have this surprise. Let's add a 10% contingency buffer. We need to make sure that the bid has XYZ. Have you forgotten to include your appliances or your landscaping? All those kinds of conversations. The very, very first step is to get pre-approved, period. Because you need to know how much can you qualify. And if you don't qualify for the entire amount of the loan you want, you're going to need to bring in cash to make up the difference. Or more likely, we're going to reduce the construction budget and build to the budget you are qualified for. So then you're going to start work on designs and submit for permits. And once we have some rough designs done and we're kind of underway and get a construction bid, at that point, we're going to meet with the HUD inspector. Your HUD inspector, who I will introduce you to, will come out to the property and meet with you and the contractor. He is going to be your new best friend for probably the next 6 to 9 months. He's going to review your property and review the construction bids. He's also going to make sure that the other parts of your home like are fully permitted, because he wants to make sure that if the city or municipality comes out to inspect your ADU, they don't say, wow, that ADU is amazing, but holy cow, look at those pipes over there, they need to be fixed, or look at this over there, that needs to be fixed. So the HUD inspector is going to do some preventative oversight as well. The HUD inspector is a cost out of pocket, typically about $2,000. But as you will see, we're going to get you reimbursed for that. Once we get the HUD inspection done, your HUD inspector gives me about 24 pages of paperwork. Yes, there is a lot of paperwork with construction and renovation loans. And I promise you, there's going to be about a week or two where you're going, what the heck is Meredith doing? The answer is paperwork. So it does take a little bit of patience. I know it's stressful to go through refinances, but I promise we're just trying to do our job. Once we have all that, we launch the loan and we do two things. First, we order the appraisal. We use specialized ADU trained appraisers who are trained by the Appraisal Institute on how to appraise ADUs. Once we get that information back, we often huddle. Sometimes we get lowball appraisal bids, and if that's the case, we need to get together with you, the contractor, and the HUD inspector and say, okay, guys, what are we going to adjust? What can we cut the budget here? Can we adjust here? Or conversely, if we get a higher appraisal, hey, do you want to add that pool you've always dreamed of? Do you want to add solar? So we'll huddle up at that point, and then get back. Once we have those numbers, we'll get back to the loan process and submit for underwriting approval. I always, when I send a loan to an underwriter who is the judge of the bank, it's their job to make your decision on the loan and also protect the bank from bad loans. So when I submit that loan to them, it needs to be absolutely perfect. And we will need to have thought through any potential problems or questions the underwriter might have had in advance. Once the underwriter approves the loan and we get the loan closed, boom, then you start construction, okay? Immediately, your contractor will be issued at the close of escrow some initial money to go buy materials, to go start setting up, and so on. But important, do not start construction until that loan is closed. A lot of people get ants in their pants and contractors push them to get started. Absolutely not. If you have made a payment to a contractor, I cannot reimburse you for payment to the contractor. And there can be other issues. Until the fat lady says yes to the loan and you are clear to close, do not start construction. Anyway, so when we start construction, funds are going to be issued to the contractor to go buy all the stuff they need to do. Buy cement, framing, ordering windows up front because those have long-term times, etc. So money will be provided. And this is where your wonderful HUD inspector has done a good job. When he met on site, the major thing he's talking about is, when do you need to get paid? And he has set the schedule for the bank to anticipate when your contractor needs to be paid. So if we do this right, and that is always my goal, your contractor is getting paid right on time, just as he's finishing that phase of the job. And what I often see is about 6 phases and 6 payments to the contractors. And these fall naturally in line with your construction. So as I told you, we upon close of the loan, we give them money to go buy the materials they need to start construction. And usually they get through the initial grading and foundation. At that point, we issue them money to get them paid and get their subcontractors paid off. Then they start framing. That's where they start literally putting sticks in the air and they have the carpenters out. When that phase finishes, we get them paid, they pay off their subs, and we go on to the next phase, and so on. Then you add the external, the skin of the house, the roof, and the trades like electrical and plumbing, get those guys paid. Then we get flooring and kitchen cabinets installed, and then the final windows and doors and the final finishes. So those are kind of the phases that I see along the way through that process. When you get your final permit and inspection, it's called the certificate of occupancy. That's when we close the loan. You can start renting the property. And what we do is we recast the loan at that time and take a look at it. If we can get you to a lower rate, we will do so at no extra charge. So now for those initial costs, let's say you put down a deposit for $2,000 for your contractor, and you also met up with your HUD inspector, you may have some out-of-pocket costs at that time. That's okay. I want you to send me the receipts and we will reimburse you from the loan proceeds upon close of the loan. Not before, not during construction, but at loan close. That's also why it's so important to get pre-approved up front. You don't want to be spending money that you aren't sure you're going to get back. Now, as I said at the end, if we need to, if rates have come down or you want to get cash out for other reasons, we can do a complimentary refinance. We simply package up your loan and we have no lender fees whatsoever and get you tied up to the lowest rate. It typically takes about 2 weeks to do. It's pretty straightforward. So with renovation loans, here is a mix of important things to know. Number one, pre-qualify yourself first. Get pre-qualified. Don't go start spending money to build a champagne castle only to find out later when you've spent $50,000 on permits that you're only qualified on a beer budget. You also need to know that ADUs have some pretty outdated guidelines for appraisers. So sometimes I see appraisers give a $0 value to an ADU. It's not even common sense, but that's why we work with specially trained appraisers who are trained by the Appraisal Institute. The big risk for all of us here, is do not run out of cash, okay, during construction. You need to plan ahead. We can, if the house is not habitable, The property is not habitable, we can plan to cover 6 months of mortgage payments as part of the loan, so you can go live somewhere else. And you also don't want to run out of money midway through construction, because that is the black hole of lending. Banks do not want to lend where there isn't additional equity or so on. And at that point, we have a pretty disastrous situation. That's why all the work has to be done up front. Most important, and I would tell you to beware of lowball bids. I see construction bids across my desk all day long, and they're pretty much all the same, actually. You'd be surprised. It's the cost of labor and the cost of materials, and they're usually dollar for dollar equal. And those costs are a little higher in higher cost areas, particularly the San Francisco Bay Area. And then the GC, the general contractor, marks up a profit margin, typically about 15%, usually tacked on at the end or kind of padded through all the numbers. But generally speaking, I see construction bids to be within, I'd say, $15,000 of each other. And at that point, that sounds like a lot of money, but really at that point, it's just a matter of someone added in appliances or didn't add in appliances, or small things where ultimately they're about the same. If you're within $15,000 of competing bids, at that point you want to pick a focus on who you connect with, who you trust the most, who has the best references, and so on. If you have a bid that is $15,000 or more lower than the other bids, beware. That is a contractor who either doesn't know what he's doing or he's deliberately lowballing you. But in both cases, they are going to come back to you and say, I'm sorry, this wasn't in the construction budget. I need $50,000 more, or I need $25,000 more. And that makes me crazy. So that's, again, why we do all the work up front. And the great thing is the HUD inspector, when he meets with your contractor, he will have require those details in there. Hey, buddy, you forgot to write in this. I have received construction bids that literally said flooring 20,000. Well, what kind of flooring? How many square feet? Are you putting in Italian marble, or are you putting plywood? It's the job of the HUD inspector and myself to make sure you're getting your money's worth. Because a contractor, if we had let that slide, the contractor could have put in $1,000 worth of plywood and called it a day, called that flooring. He's fulfilled his construction bid and walked off with $19,000 in cash. So lots of things that we're here to help you protect yourself from. In the end, when you take a look at the opportunities to build and really get your money's worth and return on investment, it is absolutely worth the effort and collaboration on the renovation loan. We are a team, and we are here to work with you and your contractor at every step to make sure you have the confidence to move forward, and we've thought of every contingency. So what are your next steps? You can always check out the calculators and videos at aduloans.net. You can always book a time with me, and of course, you want to get pre-qualified. A general rule of thumb is that if you are midway through the process and you are stressing out, not sleeping, that's okay. Book a call with me on my calendar. We will talk it through. That is my job. You're going to have multiple conversations, and you're crazy if you don't, because this is complicated and I understand. Thanks so much. I hope it's helpful. Let me know if I can answer any questions.